big. Let's bring in Scott Bauer joining us this morning. Scott, do you partake?
Absolutely not. You know that. I'm probably less so than you do.
Okay, well that's like negative. All right, mine is the accidental. Sometimes they give me the wrong one. And you know how I know it's well, I was gonna say, you know how I know I really feel this way, but you know I know it's fake is because a lot of times they don't even tell me. And I'll go back and I say, what's going on? This thing's totally different. And they go, oh yeah, we're out of the real sausage, so we gave you the other one. All right, anyway, how do you think here, Scott? How do you trade it? Market's giving it a pass.
Yeah, and I'm not going to tiptoe around this. Michael pretty much said everything that I wanted to say. The metrics are awful. The cash burn is awful. The bottom line is, I believe there's, as Michael said, a big short squeeze this morning, and I'm not buying into it. So stock to go back down to, the lows here at 25, 26, whatever that may be. But on this run up, I'm going to take advantage of just selling a call spread here. And it's an August 19th, so I've got 2 weeks here. It's pretty much an at the money call spread here. I'm selling the 37.5, 40 call spread. Could probably get more than $1, but I'll sell it for at least $1 here. Listen, if the thing continues to rally, I know what my risk is. The reason that I trade spreads is so that my risk is defined, but I am not buying into this here. Once the stock settles down, whether it's later today, maybe next week, I will look to possibly put on a different short position using puts, maybe a put spread. For right now, though, I want to take advantage of this call spread to the upside here by selling this thing. I just think the metrics here are awful. And unless this stock is primed for a takeout from somebody, and I'm not saying that it is because I wouldn't be short a call spread if I thought that was going to happen. I just don't see what the upside is here in the near term.
Well, and to Mike's point, there's a lot of competition too. So
Yes.
Maybe the thought process that its competitors will just beat it out instead. If they are part of larger enterprises, like Mike mentioned, with some of these consumer staples giants that have competing products, easier for them to lose money on it than a company whose livelihood relies on these figures.
Right.
So you're still, capping your risk here in this trade, though.
Absolutely. Again, if the stock continues to go up, I could lose $1.50. So the maximum value of this position at August 19th expiration is $2.50. I'm collecting $1 or maybe a little bit more for that. So, my risk is $1.50. There's no question I have risk to it, but I am capped out on my risk. And I'm a strong believer that once the shorts are finished here, and I don't know where that level may be, whether it's here, maybe it's up another $1 or so. Once those shorts are taken out here, we're going to see a nice retraction.
Okay. All right. And they're getting taken out for sure, up 18%. And, right next to Carvana today, up 38%. So a lot of these heavily shorted companies are definitely getting squeezed.
They sure are.
All right.
That's the market we're in right now because there's been such heavy short interest in so many of these growth stocks and so many of these stocks that are down 80%, 70% from their all-time highs. The shorts are feeling a little bit of pain.
Okay. All right. Thanks for the trade, Scott.
You got it.
Looking at some downside here in Beyond Meat. Scott Bauer, CEO of Prosper Trading Academy.